So we're talking about the economy and, of course, markets. Wale Olusi, an investment analyst with AfriInvest West Africa Limited, joins me now on the program. Wale, good morning to you.
Good morning.
It's great to have you on the program.
Yes,
so the president is back. That's one story we definitely can't get enough of, because Nigerians are quite excited that after 49 days he's back. But will this have any effect on the markets?
Well, I think the market has been a little bit immune from a lot of things happening in the real world in the last few weeks. But I think the fact that the president is back, is hale and healthy, that's good news. The market should cheer about that at least. But the fact that he also mentioned that the vice president will continue to take charge of what is happening in the governance space, as well as what he has been doing while he was on leave, let me put it that way, is also a good indication.
He's not trying, he doesn't want to upset the cart.
Correct. We've seen some breather in the economy in the last few weeks, so I think the president should be happy about that, and he should allow things to, continue to, improve, if I'm allowed to put it that way.
But most of these plans were plans that had already been on, in the works before the president went on vacation. So in terms of execution, it's more like the acting president and the vice president, that is Professor Yemi Osinbajo, just implemented what his boss really wanted. I
think that's correct. And for those that have been trying to, draw a comparison between the, vice president and when the president was fully in charge, I'm not sure it's really fair on the current administration. I think whatever the acting president must have been doing in the absence of the president is still acting on behalf of Buhari. So I don't see it as any difference. I think the vice president has just been given the empowerment to do what the president asked him to do, if I'm allowed to put it that way. So I think the president should just study how the economy have improved in the last few weeks, and see how we can continue to add on the gains we've seen so far.
And talking about the gains, so the market is dealing with a lot of issues right now. This first quarter was quite a busy one for the market.
Correct.
Coming from the FMDQ OTC Securities Exchange to the Nigerian Stock Exchange to the general economy, even the Central Bank of Nigeria.
That's correct.
They've been getting one information after the other, having to deal with so much. Now, next week doesn't look like it's going to be any easy. The National Bureau of Statistics, starting from Monday, will release a slew of data. Well, and sometime during the week, inflation numbers are also expected to be released. Do you think the market still looks to this data and still reacts? Does it still have any impact on the market?
Okay. What I'll say, or what we've seen in terms of the data that are released recently, is that it's not like the market is not really reacting to many of these data. The only thing is, many of these data, the outcome are more or less expected. Are you talking about the GDP number that came out, or the inflation for January? Many of these numbers are already expected. The market has already factored in many of these. Even the results that are coming in at the moment, many of the performance we've seen are largely expected. For the banks that have published, for example, we expected GT to do well. We expected Access to do well. We do expect Zenith to have a better year. Also UBA, but for the likes of the ones that haven't released, First Bank and so on, and maybe not. Nestle, MB, the same thing. For the economy, we expected the economy to contract about 1.6. It did 1.5%. That's largely expected. So I don't think the market is surprised. So if what we're expecting is what happens, so there's nothing really to react to. I think that's what has driven the market so far. And the ups and downs we've seen are largely due to bargain hunting, not anything fundamental.
Okay, so what's your forecast? What's AfriInvest forecast for February inflation? If AfriInvest already forecast GDP to contract 1.6 and we had it coming at 1.5, what's your forecast for the inflation numbers?
Okay, for inflation in February, we expect inflation to moderate, because all of these jump in inflation prices started last year, about 12 months ago, February inflation 2016, and we had a lot of tariff increase in the energy market. There's a scarcity of fuel gradually entering into the system, and so on. So we saw a jump in month-on-month number. What have we seen in the last 4 weeks, in the month of February 2017? We've not seen that kind of upswing. Any random occurrence that will have swing it upward has not really occurred, and CBN has even done better. They've created a lot of liquidity. So there's enough reason for, if you compare year-on-year inflation, we expect that moderation to come in. Our forecast for February is around 17.2 or thereabout, but generally we expect a moderation because there's a high base effect coming from last last year, 12 months ago. So things shouldn't be that bad. It doesn't mean prices will come down in absolute figure, but the rate mathematically should moderate. That's what we're saying.
But then we have it at 18.5.
Correct.
Presently, and you're expecting 17.2.
Yeah.
That will be a very big drop. But also, like you said, it's mathematically speaking, because a lot of people always ask this question: how does inflation numbers affect the ordinary Nigerian on the street? How does it affect what's in their pocket?
Well, how it affects what is in your pocket is what your money can buy. If you earn 1,000 naira and a liter of fuel used to be 100 naira and now is 145, it means you can only get less than you can get less than 10 liters of fuel for your 1,000 naira. So in real terms, your income has reduced. So that's how inflation affects. But the mathematics is that the month-on-month inflation, the year-on-year inflation we speak of, is just an index. The CPI is the index itself, which the NBS track across a basket of commodities that we consume. So we put a number to it. If we start from 100, that 100 is, if a bucket of gari is 100 is, let me call it 150 naira today, and the NBS want to start the computation today, so it will be 150 over 150. That's 1. So multiply that by 100, that's 100. So if we move to the following month and your bucket of gari move from 150 to 160, then NBS does 160 over 150 minus 1. That will definitely give you an increase. So if you do the same thing with what has happened between last year, 12 months ago, and right now, we're expecting that mathematics to start correcting itself. But prices may still rise in absolute terms.
So we'll keep that in mind when we're talking about commodities next week, Tuesday, with Financial Derivatives Company.
Correct.
But on Monday, the FGN Savings Bond, the Debt Management Office actually commences the issuance of FGN Savings Bond. And then we still have the FGN Bonds auction coming up on Wednesday. How much liquidity impact will this have on the secondary market trading?
Okay, yeah, for next week, I think there's going to be a bit of competition for where investors want to put their money in, because there's savings bond coming in the same week, and there's FGM bond. I think there's going to be a new issue and the opening of about two.
True.
So the question is, which one is going to give me, the highest rate as an investor? The savings bond is largely targeting the retail space. Why, of course, with this new restructuring in the market, a lot of big players in the markets will be looking at the bond. But ultimately, investors will still look at which one is giving me the highest rate, and that's where they want to put their money. I think there's a guidance on the savings bond in terms of how much rate the DMO will be issuing today. So by the time that rate comes out, we will know what investors will do. But generally, yield environment is still pretty much high. Last month's bond auction was largely oversubscribed to 16.8%. That's the marginal rate. So investors are still very much interested in what is happening in the fixed income space. So depending on what the rate is, I think it's still going to be as sweet as ever.
That remains to be seen, especially when the week starts. But still going back to that FGN savings bond, a lot of retail investors are particularly excited about it, and it also seems as if it will get an oversubscription, just like the regular FGN bond usually gets. But in terms of who actually can access it, it's just the retail investors. So the corporates and other bodies will still largely be paying in the secondary market, the bigger market, if you like to put it that way.
Well, the target is retail investor, but if you look at the max, 50 million, I think some corporates can still look at how to arrange or structure something to benefit from it.
But the purpose of the savings bond is to edge out, is to give the market more visibility to the retail investor, just to allow have a level playing ground, if you want to put
So
it
yeah, it's largely for the retail space. But if you look at the maximum rate, like I said again, it doesn't completely, push out the, corporate guys. But of course, I think a lot of retail investors should look at it. Depending on the rates, it's going to be a lot of competition for deposits in banks that we don't really get a lot of money from. Yeah.
Okay, but you already started talking about it when we started this conversation, talking about expectations for earnings. Largely, it seems as if, of course, investors and analysts are focusing on banking, oil and gas, industrial goods and consumer goods, but not so much on the insurance index. Talk to us a little bit about how insurance companies trading on the Nigerian Stock Exchange have fared, at least for 2016, and what most likely will be the outcome of their results when it does start coming in, because the market really hasn't seen any.
Yeah, I think for the insurance stocks, they've actually done well in the last few weeks. A number of them have seen uptrend because many of them have been beaten in the past. likes of Mansard, ICO actually saw some appreciation in prices in the last few weeks because many of them were trading below what we perceive to be their average price in the last 52 weeks. So yeah, investors saw that and they started coming in. Now, in terms of expectation for their results, generally we saw an increase in claim ratio. Claim ratio is the amount of payment that insurance company made to their clients after they come back to ask for claim if the risk they are trying to protect against eventually happen. What drove that is the fact that last year there was a lot of pressure on general prices, including the price of spare parts. And in the insurance industry in Nigeria, there's a lot of exposure to motor insurance. The motor insurance segment of the business seems to be the most active, but not necessarily the most profitable because of the nature of our road and the ways some drivers can be reckless. So the probability that motor insurance the probability that the risk you are trying to hedge against occur in the motor insurance business is pretty much high. So what we think is that the fact that price of spare parts have increased also means that the amount of claims that many of these insurance companies will pay for many of this motor insurance will likely increase. So we saw an average of 10% increase in claims ratio last year, at least for the 4 insurance companies that will cover. That's ICO, Custodian Insurance, as well as Mansard. The 4th one is Continental Reinsurance, who is a reinsurer of insurance companies. So, but generally, although underwriting profits might be a little bit constrained due to higher claims ratio as well as expense ratio, because some of them are reporting close to 90%, 80% combined ratio. Combined ratio is what you get when you add claims ratio as well as expense ratio. It just tell you, and it gives you an idea of what is happening to their cost component as an insurance business. But coming back to the yield environment, many of them are reporting a huge amount of investment income. I mean, insurance companies always have a lot of fund. So what they do with it so that they can meet their obligations as insurers is to play with this money in the fixed income market as well as other asset classes. But the fixed income market seems to be the most attractive at the moment. So we saw a lot of them reporting a significant surge in their investment income. So though underwriting profit is a bit constrained, they were still able to report fantastic PAT despite the challenges in the system. So our expectation is high on the likes of Mansard. We think ICO should also do well as well. And Custodian is also a big player in the industry, and we don't expect them to do less than they've been doing. So we think they'll do well on the back of the fact that yield environment is high and they keep playing in that space. I mean, we have a buy rating on ICO, on Continental, as well as Mansard.
So let's wrap up this conversation, Wale. For next week, as I said, so much for the market and investors to chew on. Are you bullish or bearish on what actually the outcome will be?
Well, next week, there's no much surprises in the market as far as we are concerned. I think the market will just see how the numbers come in and they will largely do bargain until rather than react to this number.
Well, we'll start off the week with AfriInvest again. Thank you so much, Wale, for coming on the program.
Thank you.
Wale Olusi is an investment analyst with AfriInvest West Africa.